What's going on, Monopoly family? Welcome back to the channel, back to the kitchen table talks where we have these raw, informative conversations. Today, guys, we're going to talk about the overall stock market direction. There's a lot of speculations on the internet of where the market will be heading in the near future, such as second market crash. And you'll see a lot of articles on that and the reason why the market will crash once again. And sure enough, the figures don't add up. It's not logical where the market is heading and where it's sitting at, which is pre-COVID-19 levels. So what we're saying here is the market has recovered. It's back to normal. Nothing happened with these companies that went through contraction. Nothing happened with these companies that shrunk. Nothing happened with these companies that sold their ships, sold their airplanes, and closed their stores. It's not logical. And as much as I want the market to crash, because I am short biased when it comes to day trading, I have to be unbiased here because I'm seeing a lot of things, as well as you guys are seeing the same thing, where negative news does not faze investors anymore. Negative news is not major like it used to be, where right now the only major trigger that could happen is a second lockdown. And sure enough, I'm making this video the week California announced that they're closing any indoor activities once again. So a second lockdown has occurred because the virus is continuously spiking in the US and they haven't handled it well. So sure enough, when that news came out, the market tumbled by 500 points. But then the next day it recovered and formed the V-shaped pattern that we see every day. Matter of fact, as a day trader, we see that pattern every single day in the stock market. And we use macroeconomics, market sentiment to our advantage. And even though there's negative news, what we've seen and what we've witnessed is that it does not affect the market direction that much. You will always have a recovery. So what does that mean exactly? That means investors don't want the market to crash. There's always something there to hold it up. And here is the approach that many people that came out and said the market will crash are taking. They're taking the quote-unquote Warren Buffett approach. Now, sure enough, I made that speculation once where I said the market could potentially crash. It does not make sense, and sure enough, it does not make sense. It is not logical. But right now, the investors that are investing in the stock market, they're not using the quote-unquote Warren Buffett approach, where you invest in companies that are fundamentally sound, financially sound, companies that are growing, companies that show potential huge growth. Matter of fact, the money that's been flowing in, it's been flowing into these companies that have shrunk. So it doesn't make sense to a lot of people. How can money flow into a company that is in debt and have sold their planes, sold their ships? What are you investing in? I mean, it's not logical. However, I'm going to have to be unbiased here because what we see nowadays is recoveries. There's more hype and hope in investors' blood than fear, regardless of what news occurs. So the market will always recover regardless and form this V-shaped pattern. So what are investors really doing here? They're investing and speculating on the future. They're not investing for the moment. They're investing and speculating on the future, 1 year, 2 years time. So they don't care about where the company is today. They care about where they think it will be in the next couple of years. And you will see every drop that occurs in the market is being followed by a recovery. So again, that tells us investors see opportunities in these drops. So in that case, I wouldn't even be surprised if the market goes back to 29,000, which is pre-COVID-19 levels, the highest it was at. 29,000, maybe even more. Is it a bubble? It doesn't make sense. Financially, it doesn't make sense. Logically, it doesn't make sense. I mean, you bring the market up to where it was when the economy shrunk in 2020 by 5 points. It doesn't make sense. But investors are betting on the future. They're not betting on the current situation that we're in. And there will always be a tweet that will be sent out when some negative news occurs. So seeing what we're seeing today, where the market recovers after every negative news, that should tell us, guys, that the investors are looking past the virus. They're looking past the corona. They're looking past these lockdowns. Even when the lockdown occurred, majority of money is being flown into tech stocks and online entertainment. And these are the stocks that are bringing the stock market upwards, that are dragging the market upwards, and obviously that drags majority of stocks alongside of it. So I don't believe we will see another market crash, even though we've just entered a new earnings season, which means majority of companies will report earnings, their financial statements, and make them public to investors. I don't think we will see another market crash, just because investors are already waiting for these. They already know the outcome of these reports, and what they've already expected this. The negatives have already been expected, and they've already factored that in. Now, there's a lot of Robinhood investors that also entered the market, and they just want to invest and put their money in stocks, and they see opportunities every day when a stock goes down in value. They keep buying and putting money into the market, which lifts the market even further upwards. And do not underestimate beginner traders, beginner investors. They've got money to pump into the market, and sure enough, they do pump a lot of money into the market. And that's why the market is sitting where it is today. They don't care about financials. They don't care about fundamentals. They care about the future. Speculations, that's what's happening right now. It's speculations. Investments in fundamentals is non-existence. So for somebody to come out, and I know a lot of oldies will come out and say it doesn't make sense, and I agree with that. It does not make sense, because usually we invest in these financially well companies, but right now we're not. We're investing and speculating on the future. And I don't have money invested, and I probably won't have money invested, because sure enough the market looks like a bubble, and that's scary for me. But for those that do take risks, and obviously those who take risks get rewarded, you know, I don't believe they will sell when the next lockdown occurs, or when the next kind of trigger is pulled, which is, I believe, majority of states will be locked down. You know, that's the only trigger that will cause the market to crash. And I might be wrong here. The market might crash, who knows? But it's crashing every day anyway. It's pulling back every day. Corrections are occurring every day, which means what's going on, right? It makes sense that money's being flown into the market because investors have hope in the future. And they're speculating on the future. They don't care about the current situation, and they're not really fazed by the virus. They're not really fazed by a second lockdown. And with every correction, with every drop with the market, there will always be somebody to buy the dip, because nobody wants to miss out on a good bargain. That's the thinking behind 2020 investors. So sure enough, it doesn't make sense. Logically, it doesn't make sense. The figures don't add up. But that's the explanation, guys. That is how investors are thinking nowadays. That's their thinking behind why they put their money in such stocks. And majority of money is being flown into tech stocks anyway, because tech stocks are being used as a hedging tool, because they usually work against the market and they're not affected by the overall market crash. So that's my analysis, guys. Do not take it as the full picture, obviously. You know, anything can happen. I've been wrong before. I've also been right before. But that's my thinking behind this. And that's why I believe I would not be surprised if the market recovers to pre-COVID-19 29,000 DJI, the Dow Jones overall market. Wouldn't be even surprised if it breaches that figure, because everybody wants to invest. Everybody wants to put their money in these cheap stocks. So, gotta go, guys. Appreciate you for watching. Hopefully this video made some sense to you. Peace and love. Let me know in the comment section what you think, and I'll see you again for more videos, just like always. Peace.